What's up, guys? Sam here, and I'll be doing the weekly review for the week ending in November 14th, 2025. So, the market is certainly starting to get interesting. I was not with you last Friday, so we'll catch up on the video content from 2 weeks ago at the end of the video. But the market's definitely starting to get a little bit more interesting, a little bit more volatile, certainly. And there's been a couple of signs of that coming up. Hopefully, you can see them for yourself here on the right-hand side of the screen. What I'm going to point out in terms of just a major difference in the market right now, and that is the fact that you had buy signals back here, and you had this dip, and you had that one. You had a pretty good one there. You had another one there. You had another one there. And you see how the indicator did not register a single sell signal during this period of time, right? And when that's the case, basically it's just pretty easy stuff. You just buy the pullback into the 21, which is the cloud, the 21 and the 50, and it just magically always works. Then we got into this point, right? So let's just focus right there, right? So you had this move lower. That caused the first kind of, a sell signal might be too strong of a word, but it breaks the trend, right? I don't want to call it a sell signal because the cloud is still green and still rising. So what it does is it just shifts, right? I think folks want to have markets that are either this or this. But in reality, you have that and that. Most of the time, you will have that, right? Just kind of a choppy mess, and that's actually most of the time. And that's what this indicated here, right? This indicated that this was likely to go into a choppy mess. Now, of course, it chops around a little bit. You get the government reopening. Actually, the government reopening happened over here, or at least the weekend news about it. So you go up here, you make this new high, right? It happens on a negative divergence. The indicator did not confirm that. Price pulls back into the cloud. It's the end of the world. We get a big Friday wick candle. That was last Friday. I remember it very well. And then, of course, on Monday, you get the news that the government is reopening and everything is great and whatnot. Or it actually happened over the weekend. Now, the official signing ended up being a sell the news kind of event because I suppose the government actually opened on Wednesday, not Monday, but the votes were counted over the weekend, so that's why you got the Monday pop. And so now what do you have? Well, you have this. And this is the most amount of friction that we have seen on this chart in a long time. So, is it a sell signal? And hopefully you can answer that by just looking here, right? If it was a true sell signal, you would not have a 45 out of 100 total score on this indicator. Also, you see how the structure here is dark green? That tells you that the structure of this chart is actually still perfect. You have lost momentum, and that is why the momentum is gray, because you don't have any trend. You have thrust to the downside at the moment. Your MACD is still fine, but that's a very small input. And so all of this is just a long way of saying, when I see markets that transitioned into something like this, right, there's a very different market here versus the market here, right? You see the big box, little box. I want to be blindly bullish in big box. I want to be a little bit more careful where we are now, right? So then let's kind of work backwards. We normally start with the weekly. Let's work backwards. The white line is the 10-period exponential moving average, and that is holding almost perfectly to the tick. So that is still 100% intact. The candles here are not necessarily great because it signals a lot of indecision. You'll probably end up the week, there's still about an hour to go before the market closes. This will probably end up with a doji candle, kind of one of these guys here. And doji candles are basically just chart language for indecision, right? It goes up a little, goes down a little, opens a little, goes down a little, and basically kind of does nothing for the week. So what it does do, however, is it makes our playing field very simple. Below here, I would actually use last week's low, which is very proximal to this week's. Below there, I think we're going to snap here and potentially even lower, right? There's a potential chance that if we break there, you actually have to go all the way back there. So I'm using last week's low for that. And then, of course, I would use the all-time high, right? And so just bracketing that in, and if we do that over here on the daily chart, where it might be a little bit more dramatic, that's what I end up with. Right there, right? So that's the box, roughly from about 690 to about 660. So it's a big box. And everything that's happening in here, the edge is going to be found in very fast trades, right? This is something that I covered in the live session last week. That's why I wasn't with you on the YouTube or in the premium video. Was we were doing a live meetup in Austin with some of the members of Simpler Trading. But the hour that I spent with them talking to them, I was talking to them about this pattern. And there's a couple of adjustments that need to be made here. So when you see this, this is a different market, like we talked about, than this. In the big box, you can go all out, mortgage the house, borrow some money, raid your kids, piggy bank, and dump it all into stocks, and mostly the trend is going to treat you very well. Here, however, the trick is, one, to be able to acknowledge the shift between then and now, right? Because you don't want to just blindly say, well, you know, it's at the 21, therefore I'm going to buy it. You know, you want a little bit more nuance. But the trick for this particular moment in time, in my opinion, is actually to do a couple of things. If you're going to be if you're going to be swing trading, I would reduce my size by probably 2/3, right? So whatever your typical size is, I would typically reduce that by 2/3, and I would widen my stops. So I would trade smaller position sizes, and I would widen my stops to accommodate the influx of volatility. The second thing that you can do is keep your size as it is, but instead of trading a daily chart that does not have a confirmed direction at the moment, it has a slight upward bias, and the weekly certainly still has an upward bias, but they have lost momentum, which makes it dangerous and very quick to shift. Then what you do is you drill down into a smaller time frame, and what I would do is start with the 4-hour, check that out, see if that one has a trend. If that one doesn't, then I go to the 1 hour. If the 1 hour doesn't, then I go to the 15-minute. If the 15-minute, then I go to the 5. And if the 5 doesn't, then I go to the 1. Right. So today I've been trading off of 1 and a 5 because that's where I see the trend. So keep the size, shrink the time frame, or keep the time frame, shrink the size. So we spent a lot of time there on SPY, but we'll just blow past the rest of this because it's all the same, mostly. Except the IWM, which is universally terrible. So same thing here on the Qs, right? There's no need to rehash anything that we just talked about. I would tell you the exact same thing. The Qs is actually slightly weaker here. It actually doesn't have perfect structure, unlike the SPY. The weekly chart remains perfect, but mind the gap here in terms of momentum. Let's go to IWM next. So IWM is trying its very hardest to put in a green day today after being absolute garbage for about 3 weeks now. And this one's already breaking down, right? This one's already, this is damaged. So this is something that's been an issue in this market, is that there is no broad participation. And then when they do bring things in like the banks or healthcare or energy, then they drill tech, right? They drill the Mag 7 to the Earth's core, and then that ends up not, it ends up being a wash. Usually it ends up being negative because the Mag 7 is so big. So what do you have now? Well, you kind of have a little bit of an undercut here across these lows, and if they're able to close it right around 238 or higher, there's a little something here, but you can see for yourself. Every chart that we've looked at had green structure. This one has red structure. Every chart we've looked at so far, and we've only looked at 3, but the other 2 had gray momentum. This one has purple, meaning it's about to go negative. On the weekly chart, we have not seen a single one that has a thrust lower candle as well, right? So this one's probably going to close below the weekly 10 for the first time. I personally have no interest in trading the IWM. If next week the IWM is the star of the show, I will not feel left out. I just cannot trade something that's weaker than other things that are comparable. If you give me 2 apples and one apple is has a tiny brown spot and then the other apple is rotten, I'm going to take the one with the tiny brown spot. And even though it's not ideal, And that's what IWM right now is. It's an apple with a rotten core, but it's actually still not bearish. It's just a transitioning into volatile chop, essentially. So that was the indexes. Let's go to the bond market. We always look at the bond market the same way. I don't actually advise that you look at interest rates unless you're trading bonds directly, which I don't think many of you will be. If you're looking at interest rates, because, and here's why. If I were to tell you that the interest rate's going to be down on Monday, could you tell me the direction of the market? Probably not. If I were to tell you the interest rate was going to be up on Monday, could you tell me the direction of the market? Probably not. Not based on just that. However, if you look at just HYG, then it gives you a lot more information, right? If you were to tell me that HYG on Monday is going to be up, 50 basis points, then I can pretty reliably tell you that the indexes are going to be very green, right? And vice versa. If it's down 50 basis points, I can tell you almost with absolute certainty that the indexes would be red. So I look at this. HYG, just for those of you that don't know, is the spread between junk bonds and government debt. So basically, if the closer the junk bonds get to the interest rate that the U.S. government pays, that's really bullish, right? Think of it like all the junkiest companies, their credit rating is being increased, kind of thing. And so essentially we look at this as just a proxy for risk. And as of right now, it is a little bit of a mess, right? I could not tell you what happens next. There's a lot of issues here that I see. Primarily here in the fact that you have bearish slingshot to the downside. That's not good. This gave you a down signal a couple of weeks ago, and now this is caught up. The squeeze here does not look great because it's forming in a downward formation. So the bulls don't have control of this chart anymore. I would say that this chart is anyone's game at this point. And that's the first time that we've said that in months, right? This chart has reliably been on the bull side, and I would say at this point it's completely up for grabs. So no edge here for the bulls on the HYG. If we go to the VIX, now this is where it gets fun, because if you recall, I've been telling you about the VIX signal, and we are getting ever closer to whatever it was going to be, and I think it's going to be a doozy. I just don't know what's going to trigger it. But it's already trying to go. So the VIX signal, I've talked this signal to death. You can go back and watch almost any one of my last Friday videos if you care to get the explanation in full. But essentially, you see how you have a dot upwards here? That to me mirrors this moment in time back here, right? However, this should be noted, this went 1, 2, 3, 4 dots, and it wasn't until the 5th dot that it actually launched to the upside. So the question is, well, Sam, if that's history, shouldn't this go 1, 2, 3, 4? That's 4 dots, 5 dots before we have a problem, and the problem happens in December. You could argue that, and that is logical, but at this point, the way I prefer to do it is just to say risk is imminent, and I don't know when this will happen, right? Like, could it be identical to last time? Sure. History doesn't tend to repeat, but it does rhyme. So I'm still looking for some event that is unseen at the moment, or at least that I haven't seen, to trigger in the next month that's going to do something here with the VIX. So this ties together with the initial thing that we started with by saying risk, in my opinion, is imminent. It could happen in the next week. It could happen in the next month, right? That does not bode well, in my opinion, for multi-week swing trades in most cases, because this entire time boded well for multi-week swing trades, but the moment that you go flat, and I'll give myself props because nobody else will, I told you this was going to go flat on Halloween, and it basically did, and here we are now 2 weeks later, and it has a little bit of an upside tail to it. We're actually about 2 dots to the upside here, so that would give us about 3 more weeks, right around Fed actually, before something could potentially trigger. So this is completely up to you in terms of how you want to trade this. Some folks like to push it right to the edge and think that they can get out right before the drop. I'm not going to assume that I'm that good. What I will do is just say, hey, Sam, these are all the signals that you see. There is no sell signal. It's not bearish, but it's no longer super clean bull. And because of that, what I would like to do is just make my personal adjustments to do what I told you is good practice. And I have two choices. Either A, I continue to swing trade despite all my biases. I reduce my size and widen my stop. That doesn't sound like something I want to do. Or I keep my size and I reduce my time frame and trade that and go home flat every day. And to me, going home flat every day in a market like this sounds like a day at the spa. So that is the way that I will approach it until proven otherwise. So that was VIX. Let's round back to last week's video, which was or the week before that. I told you that there was one earnings trade that I was doing with the room. For those of you that are watching on the Simpler Trading website, you've already seen this, so you don't have to pay attention to this, but I just wanted to come back for the folks in the YouTube and cover this. So we played D-Dog in the room for earnings. We started buying it all through here. Hopefully it's pretty self-explanatory as to why. You want to buy dark green candles with squeezes, max bull plus squeeze. Look at all these beautiful arrows here right before it happened. And then of course you get a huge pop on earnings. So I usually say that I'm the world's worst earnings trader, but in this case, this one ended up being pretty good. So the reason I wanted to talk about that is because 2 weeks ago in the Friday video, I specifically made a point to talk about this stock and only this stock. And so I just wanted to close the loop there going into next week. Aside from that, I don't really see much else to cover here. I'll verbally shout out two stocks that I'm going to be looking at very closely next week, and that's going to be Apple, based on the 4-hour squeeze, as well as Tesla. But Tesla needs to be above 415 for me to be super interested in this. So the reason I'm using 415 and not 420, as you may assume for the stock, for the Tesla stock, is because 415 was the high right there, right before it crashed to 100. So stretching that number across 415, you can see that the last time that it went above 415, it failed, massive crash. They're kind of trying to do the same thing now, and I would love for them to be wrong, more than anything, actually. So the only way that I can add to Tesla, because I already have a Tesla position, is if and when it gets above 415. Then at that point, I actually think that sets up a pretty strong reversal signal to the upside, but it has to have at least, just to be safe, it has to have at least 2 consecutive daily closes above 415, and then that sets up a buy signal in Tesla. So just wanted to cover that one. I think it's interesting, and I have a very clean level for you there at 415. So mark it off on your charts. Understand that that flips the polarity of the chart, and that is what you would want to see if you are bullish in Tesla. All right, guys, so that's my time. Thanks as always. Leave us a like, leave us a comment, leave us a like, leave us a comment, and I'll see you in the next video. Cheers.